let's go over our indicators. Always at high noon highlights at the very end, I like to go through our indicators, our plan, our current positions, what's going on. So let's go through that right now. Okay. Let's start with crypto. All right. Again, nothing has changed on my plan with cryptocurrencies. I'm still waiting for those levels that we talked about. Bitcoin to gold, I'm still waiting. Oh, it is coming down though. Oh ho ho. All right. Is it possible we see this? I would love to see that. If we see something here, I would love to buy in with some Bitcoin. Okay. ETH to gold ratio, I'm still waiting on this. I'm still waiting on this. All right, this red line right here. Okay. You can look at previous episodes and see how I did it. I think I charted this live a couple times because TradingView kept deleting my lines. But basically, it's just the uptrend in 2020 on ETH to gold. On Bitcoin to gold, the uptrend starts actually way before. It's from the uptrend from 2017 to connecting to the lows of 2018. And I think the institutions are using this as well. Okay. So when it hits that red line, that's when I'm going to place my buying orders. Okay. So nothing has changed in that. QQQ indices. QQQ is actually now right at our, our resistance channel right there. This is where we saw increased hedging demand right here. This is where remember how I built those put spreads right here, the last round. All right. I should have been patient like then and just did it right here near the lines, but I started a little bit early this round because I thought it was going to happen sooner, but that's life. But anyway, we saw hedging demand increase every time it touched this line. Right here was huge hedging demand. And we actually saw some institutional selling happening at these levels. I'm just thinking that it may continue at that line. It makes risk management easier too. If we close above, let's say 330 for 3 days in a row, I'm wrong and I get out. Easy, okay? It makes risk management easy. So I do have some orders on the November chain. My order right now, it hasn't filled, I think. Let me see. Yeah, it hasn't filled yet. I have November. I have some November put spreads. These are orders. These haven't filled yet. Okay, so this 305,295 put spreads. I have it set at 250. So I want that 3-to-1 reward risk ratio. So that order I will keep open. Okay, it's a GTC, good till canceled order for me. All right. So that is that. I still have my IWM. I still have my IWM puts. Again, I accidentally kept an order open after the October one filled. So both of them triggered, I guess, which is fine. Both of them are super small. The QQQ one, by the way, guys, that's a super small position too. I'm legging in just in case if it pops over that line for a couple of days, I'll leg in some more there. But again, if it closes over that 330 for 3 days in a row, I'm out. But there's a chance that it could still go up about 1% or 2 in the next couple of days. All right. I'm still in the 180, 170 put spreads for October, and I'm also in the 180, 170 put spreads in November as well for IWM. Okay. So there is that. Those are my index positions for U.S. indices. All right. I forgot. DIA, Dow Jones. I'm still in the Dow Jones as well too. The Dow Jones spreads. Those are for October, and I'm still in the 305. The 300, 290 put spreads. Long the 300, short the 290. All right. I'm still in UVXY as well, the call spreads. I do still think that we're going to see an outsized VIX move as all those institutional buys that happened in the last couple of months. They are, I think, I'm anticipating that they are a little bit under hedged on those new shares. And so when everybody tries to hedge all at once, I think we're going to see that outsized VIX move. Again, I'm long the 14.24 call spread, long the 14 short the 24, long the 15.20 call spread, long the 15 short the 20. Okay. So still in that. FEZ, okay, Euro. Um, the Euro index, I'm still in the November spreads. I'm still long the 32.27 put vertical, long the 32, short the 27. If we see the Euro close below the 18-day moving average 3 days in a row, and FEZ still keeps going up during those 3 days, on the end of that third day, I will add some more to this position. Okay, I will add some more to this position if we see that. Okay, EWT, I'm still in. Oops. I'm still in EWT, which is our Taiwan ETF put spreads for December. I'm still long the 49.40 put debit spread. Okay, HUT. I told you guys I've been HUT is something that I transferred from my long-term account, so you can also see me selling covered calls. I'm still short the January 23 $5 calls. These are covered calls. Okay, I do have shares, and I'm just selling covered calls. I will still buy HUT when it gets to our 165 zone, that 150 to 165. I will buy some more of HUT. That's part of my crypto exposure plan as well. All right. So that's HUT. What else do we have on our plan? Ford, still part of the plan. Man, what a great company. You know, I actually raised my buying levels. I know yesterday I keep going between like, oh, do I lower it? Do I higher it? I actually think if we see a pullback, I don't think we're going to see anything meaningfully under 13. Let's say like under like 1380, 1370 or so. I don't see it coming down that much. I mean, just the fundamentals of this stock. I mean, you know, but however, I will say this: if you guys subscribe to that TA theory and chart formations, doesn't that kind of look like a head and shoulders? I mean, the measured move off of a head and shoulders break would probably be around the $8 mark. I mean, that's possible. So what I might do is do some tiered buying. So I might buy a little bit here at 1380, buy a little bit more at 12, and then also sell some cash secured puts under this, under maybe at like strike 9 or something, just in case if it does pop under 8, I can take assignment of shares at under 9. So I might do some type of tiered legging into F. All right, but I will start legging in probably around 1380 or so. I am going to get a little bit more aggressive on F, but I do think we still have one more pullback though in the markets, and that might be a great opportunity to get into Ford. All right, so that hasn't changed. At least my bullishness on F long term has not changed. Where I might start buying, that might change depending on price action. And again, I'll keep you guys updated on this as well. All right, TLT, still looking for an entry. I'm looking for that 112 zone. I really want that 112 zone to get long. All right, I really want. I'm going to be a stickler for that. I really want that 112 zone. Okay, I want that 112 zone. That is when I'll start going long on this. All right. I think the Fed may try to push this down a little bit and raise yields. So on that next opportunity, I will buy this. But overall, you know, that's going to be a very small position. The bigger position is going to be me shorting TLT if it gets up to 135 zone. When it goes to that 135 zone, I will short TLT via 3 to 6 month or maybe even 6 to 9 month put vertical spreads on TLT. Okay, so that is the plan for that. Again, the indicator ZB, or no, I'm sorry, I keep saying ZB, it's ZF, the 5-year treasury note. If it goes down, again, dash for cash. If it goes up, cash is trash. All right, that's ZF. Okay, so that is what I'm looking at. Those are the indicators I'm looking at. One other indicator, guys. Again, what's important is our junk bonds AD line. Our junk bonds AD line made an advance yesterday, but again, it's just one day. If we start seeing a pullback in junk bonds liquidity, that could definitely cause a little bit of volatility in the markets. HYG also, I think, is a very good indicator right now as well too. I think the Fed is looking at the HYG chart, and if they see HYG going up to around these levels, they're going to get a little bit more hawkish on their tone. Definitely, they're going to try to talk this down because I think it eases credit way too easily, or it eases credit too much for zombie companies and unproductive companies, and they don't want that. That would reverse all the tightening that they've done. So they're probably going to talk this down. If you see HYG coming down hard, then expect to see some volatility in the markets. All right, our New York high-low line, again, it just refuses to curl up. That's why I do think that we still have one more big pullback left. That's why I think this is still a bear market rally, because usually if the bear market is over, we want to see this line going past all its moving averages. Okay, and the moving averages are right here, 29.4. So you can actually chart this yourself. It's all free. It's all on stock charts. Okay, everything I use is free. Everything I use is generally available to the public. All right, I don't use any type of special wizardry. Okay, most data is available to you. It's just the matter of, is it live and how well is it organized? But there's a lot of good data out there that's free. But yeah, this is one that you can use. You want to see this curl up to really see that, to see the end of a bear market and the start of a mini bull market at least. Okay, if you want the bull market to have some legs to them and have a little bit of a sustainability, then yes, you want this to curl up. Okay, so until we see that, it's a bear market rally. Okay, so until I see that, and until I see a lower high, a higher low. Until I see a higher low on junk bonds AD, until I see this curl up, all right, and make another higher low, I'm going to remain neutral with a slight bearish bias. Okay? So until that, nothing changes. All right? So those are the indicators I'm looking at. That's my current position and my current plan. Boom. Checkmate trading. That's how we do it. Okay? Any questions, comments, rude remarks? This is your time.